Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 6th day of January 2015, and this is the daily report for gold and silver. We have a continuation of this rally which began at the beginning of the year and has propelled gold substantially higher, currently trading up roughly $13 to $14 on the day. 12.18 and change is the current print. It's had a low of 12.0520 and a high of 12.2410. Of course, we did send out a special trade alert. We'll talk about that in just a little bit. Silver also showing a nice gain on the day, 16.53. That's our current print. Puts it up about 36 cents on the day. The low 16.11, the high 16.84. And we also put out a buy signal in silver. We'll talk about that towards the end of the show. No doubt, interesting day in the market. Oil continues to plunge. That's putting tremendous pressure on the equities markets. The equities markets also trading lower this morning. Interestingly enough, though, gold is trading higher, but the dollar is also strong today. And when we look at the Kitco Gold Index, we actually have an additional $2, which is really the change due to the strengthening U.S. dollar. And then you've got about $16 to the upside in just gold trading, normal trading, so to speak. Now, we currently have the market sitting at about 12.19. And last night, I was taking a look at this market. In fact, the first alert that I sent out this morning, if you guys recall, was really a cautionary note for us to take a look at the market, because what I saw last night was this tremendous breakout, was trading roughly at 12.11, but we were, quickly approaching this resistance line, this upper level resistance line, and my sense was that I really didn't want to get us trapped in a scenario in which we see the market move up to the resistance line only to move back down, then we move up only to move back down. However, that all changed this morning when we saw it starting to trade above. Of course, it traded a little bit below, but roughly my sense was that any kind of move where I saw any stability roughly at the 12.17 area, we would go ahead and issue a buy recommendation, which we did, of course, this morning. Traders that have taken this call should be in roughly at 12.1750, 12.17 and change. And market's currently trading roughly 12.19. Now, I would like to see, obviously, a clear and concise move really above this long-standing resistance line here. I'll feel a lot more comfortable, and that's the reason that I put the word cautious, a cautious buy signal, because we're really looking to buy the market, and we're buying the market just at this breakout. And we could obviously see the market move a little bit above it and then back within this particular cycle. But here's what I'm looking at that's absolutely different than what we've seen recently. And really, to illustrate that, I've gone ahead and pulled out a daily chart. This is spot market. If you recall, right before the end of the year, we really got all of these mixed signals. And I'm talking about this area right in here, in which we had alternating candle colors. So we'd have a dramatic up day, followed by a dramatic down day, followed by a dramatic up day, and so forth. And so we were getting this alternating candle color with no real clear direction. And in fact, if you take a look, right at the beginning of the year, this being 2015, this is the starting point, the daily, we had this market come down and test this particular low right here. In fact, let's go ahead and put up a different pointer so that we can see where that came in at. But that came in at roughly 1167. You can see that here. But for the last 3 days, we've definitely had a defined breakout. And so we genuinely are noticing something different in the marketplace, because now we've had 3 pretty strong days to the upside. And as I said, what we were looking at in terms of the marketplace itself, and we can do it in a couple of different ways, but the fact was that we had this succession of lower highs, and that's what creates this resistance line, this downward slope resistance, and then a break above that, of course. That's what signaled, not particularly on this chart, the one that I sent out, but that's what really signaled our buy trigger this morning. So traders, when we look at our weekly chart in gold, kind of interesting because these alternating candle colors that we had over the last couple of weeks, just prior to the conclusion, of course, of 2014, really created basically a doji candle here, which is a consolidating candle. That was followed by the final week, which culminated, of course, on the second day of January. This would be last week, and although we had a small down week, again we had the small bodied candle right in here. Well, that has seemed to change, because if you look at the body size and what we've seen this week, we've got a tremendously large move over the last couple of days. Now, I've just gone ahead and pulled up, in fact, for this particular chart, I don't really require those fib points in there, but I've pulled up a monthly chart. We never trade off a monthly chart. We look for really long-term direction, but I do want to point this out because it was something that I was looking at the other night, and I find it interesting. If we look at this decline that we had really beginning of March, then it goes sideways and then down, of last year, and then we take a look, for example, our November and then our December candle, this of course being our candle in January, but you really get a defined downtrend, and you actually get a 3-river morning star variation. If we take a look on a monthly chart, you've got a defined downtrend. That's the first criteria for this pattern. Long red candle, followed by a star, followed by a large green candle. Now, we don't really have a large green candle, but we certainly are getting that follow through now if you combine these two candles. And that really, this would be your confirming candle in terms of the call. Now, again, this is a very long-term chart, but I do find it interesting nonetheless, and felt that it's absolutely something we need to point out to you. Oil, just under substantial pressure. Again, another monthly chart, but as you can see, we are in the first week of this month, and look at the size or the move that we've seen this year, in which it was above $50, I believe around $52, $53 per ounce, and this was as recent as last month. Now we're trading well below $50 at $47.83, and really where this market will bottom out is anybody's guess right now. We know back in 2009 we had this historical move from over 140 to under $40, so a tremendous move in oil. Could it go back there? Well, I don't know, but I can tell you this, historically speaking, it has in the past. Dollar continues its upward move, but on a weekly chart, this is a cautionary note, obviously, but on a weekly chart, you can see so far, again, this is only Tuesday, so we have to see how this fills out, but we've definitely got a small-bodied candle in a evening star position right in here. And secondly, if you recall from the different points that I talked about for resistance, I really mentioned about 92 and told you that that is where I thought we could in fact see some sort of resistance, and we're really right now at 91.81. So we hit this particular target, and the question is, will the market exceed it and move above it, or find some resistance here? Of course, that's something we'll have to determine over the next couple of days or weeks. And then finally, Standard & Poor's continues to fall under pressure. You know that we have been looking at this particular chart for about the last 2, 3, maybe even 4 weeks. And we talked about the fact that really all that I've done here is put in a basic fib extension, looking at this is a wave 1, this is our wave 2, and we are currently in wave 3. We projected wave 3 to go anywhere between 150 and 161% that of wave 1, and there is absolutely no doubt at this point, for whatever reason it has occurred. And of course, it is the oil market under pressure, but we have certainly on a technical basis found some resistance here. Now, whether or not we see the kind of a blip where we saw, I believe back in October, where it came down, you had the substantial correction and then move back up to the next level, you can absolutely see that there was a little bit of resistance right in here. We certainly have this resistance again right in here. The question is, at what point will this market find some support and turn back around? And traders, finally to silver. My sense is, and you know I've not been all that bullish on silver, but my sense is if we're seeing some sort of a real defined breakout in gold, we are probably going to see silver follow in sympathy or in tandem with the precious yellow metal. And if it does, in fact, we've seen on moves up where silver, in terms of percentage gains, has actually outperformed gold. And the reciprocal is also true. Percentage of, as the market moves down, it tends to have a larger percentage drawdown in terms of the level of equity, so to speak, when the market's in a sell-off mode. And so I felt that beginning of the year, we're going to try to take advantage of both markets. You should be in roughly in this area. Stops are below 16. My initial target for silver right now is going to be just at around $17. It's based upon these tops. My initial target for gold is going to be roughly 1241, which was one top that we had, and then 1254. Those are the different targets. Clients, my recommendation is that you maintain long positions in both gold and silver, maintain our stops. If this trade begins to really move within our favor, we'll look to tighten up those stops fairly quickly. This has been Gary Wagner wishing you as always good trading, and we will talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.